Be honest. Have you ever faced to yourself, I really should start investing, but I have no idea where to begin? You are not alone. Most people want to invest but never do because it sounds confusing, risky, or just something future may will figure out. Well, today the future you has been waiting for. I'm going to break down exactly how to start investing from zero, step by step, in a way that's simple, realistic, and actually works. By the end of this video, you will know where to start, what to avoid, and how to make your money works for you. Let's do this. In this video, we're going to break down in some chapters. So let's start with the first chapter. What investing really means. Let's start with a simple truth. You don't get rich by saving, you get rich by investing. Saving keeps your money safe, but investing helps it grow. Think of money as seed. If you just keep them in a jar, nothing happens. But if you plant them, water them, and give them time, you grow a forest. That's what investing does. You are putting your money to work, so one day you don't have to. Yes, there is risk, but investing at all, that's the biggest risk. Because time is your greatest ally, and waiting for too long means missing out on compound growth. Know your why. Before you invest a single dollar, ask yourself why I am doing this. You don't need a finance degree, you need a reason. Maybe it's financial freedom, maybe it's buying your dream home, maybe it's never worrying about bills again. Write that down, make it specific, then think about when you started. Short term, mid term, or long term. Because your time horizon decides your strategy. If it's a short term, you will keep it safer. If it's a long term, you can ride the waves for bigger growth. No plan, no progress. Clarity is your compass. In the third chapter, what you can invest in. So, where do you actually put your money? Here are the main categories, and don't worry, I will keep it super simple. Stocks, funds, bonds, real estate, cash, or savings. So that's just stocks are the one owning a small piece in a company's high risk, high reward funds, mutual or index fund that spread your money across lots of stock. Lower risk, easy for beginners. Bonds, basically lending money to government or companies. It's also the slower growth. Real estate, property or land, great for long-term investors. Cash or saving, safer but does not grow much. You don't have to pick just one. The smart investor diversify. They spread their money so one bad day does not wipe everything out. Think of it like a balanced meal. A bit of protein, a bit of carbs, and a bit of veggies, not just desserts. Now, in the fourth chapter, how to start. All right, let's make this actionable. Here is your seven-step start plan. Step one, clean up your finances. Pay off your expensive debits and build an emergency fund. Step two, pick a trustworthy investor platform or broker. Make sure it's regulated and transparent about fees. Step three, start small. Even $10 or $20 a week matters. Consistency beats intensity. Step four, choose a mix of investment that match your risk level. If you are new, start with a simple diversified fund. Step five, automate it. Set up monthly contribution so investing happen without relying on willpower. Step six, don't panic when market move. Volatility isn't danger, it's opportunity. Step 7, review every 6 to 12 months, not every 6 minutes. Adjust only if your goal or life change. The secret is not picking the perfect stock, it's building the perfect habit. Now, in the fifth chapter is common mistakes to avoid. Now, let's talk about the traps that destroy beginners so you don't fall for them. Mistake one that usually people make. Trying to time the market. Even pros can't do it. Focus on time in the market. Mistake two, chasing hot tips. If everyone talking about it, it's probably too late. Mistake three, ignoring fees. High fees quietly eat your returns. Mistakes four, Putting all your money in one mistake. Five, letting emotions drive decisions. The market reward patience, not panic. Investing is not about being smart ones. It's about being consistent forever. Now, the chapter 6 is mindset, the secret ingredient. Here is something nobody tells you. Investing is 80% psychology and 20% strategy. You can have the best plan in the world, but if you panic when price drops, it's game over. The market will go up and down. The key is to focus on your long-term vision, not short-term noise. Remember, every day you survive makes you stronger, smarter, and wealthier. Patience is your superpower. Consistency is your weapon. Time is your ally. Now, the chapter 7, your action plan. Okay, so here is the three-step action plan you can start today. Write down one financial goal and why it matters. Open an investment account and set a small recurring amount. Even $20 is fine. Promise yourself you won't quit for at least 1 year, no matter what the market does. That's it. A small consistent action beats big, random moves every single time. You don't need to be rich to start, but you need to start to be rich. If this video gave you a clarity, hit that like button so more people can find it. Subscribe for more investing tips and comment below what's your financial goal. Thanks for watching. Now go plant those seeds. The future yourself is ready to proud of you. Thank you.